All right, good afternoon. Today is another weekend where I come here to share my screen and very much discuss on my analysis on the pairs I've traded in the past. So last month I made my third withdrawal on Xness. I've already posted that on some of this media platform and telling people how I go about trading. And I want to share this today in my screen. I want to share how I made the money and the kind of trade I took, because as I've been analyzing this thing for the longest, as we all know, I'm more into swing trading. This is the ability for you to foresee 500, 200, 1000 pip ahead. Once you see that, all you have to do, you've already mapped out your key levels from the higher time frame to the lower time frames. Then you trade according to the provisions of the trend. This is it. If you look at currency pairs, like one of my favorite currency pairs, USDCHF and USDJPY, two of them are positively correlated. However, one has a more higher daily volatility than the other, which is USDJPY. It makes a bit to 100 pip to 300 pips on a daily pip move, while USD makes a little bit around 150, 200. One makes, so it depends on the market volatility. However, USDJPY has volatility more than USDCHF, and because of this, I've already known over time that if you're selling USDCHF, automatically you should be selling USDJPY. And because of this, whenever I see a very good entry opportunity on USDJPY, I wait to see if I can see same on USDCHF. Sometimes USDJPY will be on a higher volatility trend more than USDCHF. This being said, I mean, if I'm trading one of this pair, I don't trade two of them simultaneously. I trade one and using the other one to know what is happening in the other trend, because opening USDCHF on the bearish and opening USDJPY on the bearish is just like trading the same position. So what you have to do, maybe you add a position in the one you already traded. Let's say I'm bearish or bullish on USDJPY. Instead of me doing the same on USDCHF, all I have to do is just to add positions on USDJPY, because I already know that they are positively correlated. On the other hand, I also know that GBP USD and Euro USD are also positively correlated. If one is buying, the other is doing the same. However, one has more daily volatility than the other. So because of this, I've known this over the years by investing more than 1,000 hours of screen time and research, did baby peeps, bought courses, and some of my analysis, including the fundamental and the technical. But I'm not here to do that. All I have to do today is just to share my screen on the trades that I took last month, the two trades that actually made me a good number last month, that actually helped my P&L positively. Because of this, if you understand how the market moves, that's why most times when I see day traders or scalpers complain that they blew the account, is because they've not come to understand one, the main concept of the market, how the market moves, the pairs that moves most, how to calculate daily volatility, and also knowing the fundamental tenets, the drivers of the market, which are the micro and the macro. You have to know that anything happening between the White House and the Fed, almost, in fact, it affects the market. If there are reciprocal tariffs between China and US, it affects currency pairs like USDJPY. It affects, if there is a trade war between US and Canada, it affects currency pair like USD. If there is a dispute between US and European Union, it affects currency pairs like GU and EU. So once you understand these drivers of the market, you position yourself in a way that you've mapped out your levels. Let's say GBP USD is on a bullish trend. You've mapped out your level. Let's say when you started trading up, you've mapped out your level, you've mapped out your resistance and your support on a higher time frame. Now you scale down to the daily time frame. You want to look at chart patterns. You want to see if there are imbalances between these tradable assets. Once you map those levels out, your minor support and resistance, you go to the forward time frame and look for entry trades. After doing this is where I go to my fundamental. I want to see what analysts are saying. I want to see what analysts from Goldman Sachs, JP Morgan, Bank of China, Fed, European Union, I want to see what they are saying concerning a particular level. Once I do this, I go ahead and map out those levels. Those are psychological levels that tells me, okay, once it's Monday, I want to see a 4-hour candle close above here or below here. This is how I start to trade. So before I go into my screen, I want to do one or two things. Just like, comment, and subscribe to the channel. It's how to motivate the channel to keep adding positive content. And also, if you want to learn how I trade by analyzing the market from the higher time frame to the lower time frame, how to interpret fundamental drivers, I have a course. All you have to do is just comment interested. I am going to DM you. I think I have my number in the bio or something. You can mail me and tell me that you're interested in the course. The course teaches how to understand the market, how to calculate pip move, how to differentiate between tradable assets, and how to interpret fundamental, which is the most important, and also how to trade Fibonacci, because I trade off Fibonacci, but not always. I focus more on the fundamental and the technical. If my technical is in shape, which I use as a gatekeeping, I wait for the fundamental to confirm to me that okay, it is time to bounce. So I would like to usher you inside my screen, and do well to like, comment, and share. I will see you on inside. Thanks. Alright, this is inside my screen. This is USDCHF. Like I said earlier from this onset, this when I started trading, I started much with USDJPY, and before I started going into others, and USDJPY happened to be one of the simplest pairs I trade. Then I transitioned to USDCHF after understanding their positive correlation, and it became very much easier. This was the first position I entered. I started calling this pair bearish from here on the 26th to 25th February early this year. This was my first entry after understanding that it has broken this neckline. This was a very major resistance, and this was a support, and I did my first entry from here to here. The second entry ran from here to this point because of it was getting closer to this resistance. However, I wasn't, because I look for 2 to 3 trading opportunity, 3 to 4 sometimes trading opportunity every month for me to hold as long as possible for that month. So last month I ended it with trading JPY, USDJPY, and I was waiting after the break of this support. I'm waiting for, now it has made a pullback closer to this support again. I want to see what happens here. If I see a 4-hour candle close below here, I mean 2 4-hour candle close below here, then it means the pair is very much continuing its bearish trend, which means this is a lower high, lower low, lower high, lower low, and it has made a lower high. I want to see what happens from here. But however, if you watch my previous analysis, how I started to know that this position is a bearish position, merely looking at this, I did analysis on this. I've been doing analysis on this pair for the longest, and if you look left, this is a very strong resistance, this is a major support, and this is on the weekly time frame. Merely looking left, you know that this is a triple top formation, and this happened to be a neckline. The first time it got here, it made a pullback, retested, and crashed to the downside. Likewise, the second time it came here, it did the same thing. And so when it got here again for the third time, I knew without anyone telling me that this pair is still very much going to repeat what it did here. However, I caught this position and it got here and it broke this support. Normally, if you look left again, this was a double bottom. But however, you know, every level gets broken by 3 to 4 touch of that level, and the third touch actually broke the support, which means it has now made a kind of pullback to that support that was broken. Now, for me to trade this pair, I want to see what happens after some days. Now, my pattern of trading is long term, because I want a pair I'm going to enter. Once I enter that pair, I allow the market to run for as long as a week, 2 weeks, and above. And now I don't just enter here because I've seen this. I scale down to the daily. Merely looking at the weekly, I already know I scale down to the daily, look at chart patterns, and chart patterns is telling me this is a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And it has made a lower high. So I want to see what happens here now. From Monday next week, Monday, Tuesday, Wednesday, I want to see what happens. All these levels are levels called by analysts. I think I got this analyst from UBS when they said if it breaks this resistance, this support that is now acting as a resistance, the first price is coming to test is this, and the second price. So I want to see what happened here, and because of this, I have a double bias. That's why you call it trading. It's a probability game. You don't have to put yourself in a box. This is my first bias, merely looking, understanding what analysts are saying. This is my first bias, which is this. I want to enter once I see a 4-hour candle close above this support. Mind you, this support was broken and now is now making a retest. So if I should see a 4-hour candle close above it, that which telling me that this projection by analysts is going to hold. This is the first entry, and this is 2.36 RRR. And the second entry is this analysts based on analysis and based on my price action. This is a neckline now. This is acting as a neckline. So this is it for it. I want to have a second bias here, which means I want to see a 4-hour candle close below this line, telling me that okay, the pair is about to make a bearish trend. Even if it doesn't continue, I still understand that this is a very pivot point. This point is a point where the market started turning, which means if I see a 4-hour candle close here and I enter this trend and I get to this side, this is where I want to take partials. Now if I go to on the 4-hour chart, it's easy. On the 4-hour chart, look at it. On the 4-hour chart, it's telling me that now it has made, this is looking like a double top on the 4-hour chart, but I don't normally take chart pattern serious on the 4-hour. 4-hour is where I want to come and make my entry. And yesterday was NFP. NFP couldn't make this pair to blow out of this support that was broken. However, this line is a psychological level. I want to see 2 4-hour candle close below here. Once I see 2 4-hour candle close below, I start selling to this point. And once you get here, because of what's happened here, this was the point that the market turned to the upside. I will very much notice it, which means when it gets here, I'm going to close break even around this point. When the market gets here, I will break even, enter here and break even here, and allow the rest to run. So once I do this, I will be monitoring what happens from here. If I see a daily candle close below this level, now on the daily time frame, once the market gets here and I see a daily candle close below this level, then I'll extend my TP to this point, which is the next turning point following my previous overview from the higher time frame, telling me that okay, the bearish move will continue. And again, I'm not delusional to know that the market is dynamic. That's why I always have a double bias. This is my brief overview on USDJPY, and this is how I plan to trade again this month that we are in. This is May, and I'm looking for a position I'm going to hold for up to 2 weeks or a week or some days. Now, for last month, the first entry that I made on this pair was from February 26th. I started my first bearish position. The second, I completed it on I think March. I entered March against April, but I took other trades on GBP, USDJPY, yes, because USDJPY provided a very good entry opportunity. Now, if I should go to USDJPY, this is it. I think this is the first. My first entry was here to here. I waited for this. After this rally, I saw this. This was a double top. I did my second entry from here to here. I entered from here to here. I made my third entry on USDJPY. And now, because of understanding that the pair has gotten very much closer to the support, this was where I closed my position. Now, judging from, again, referring back to the weekly time frame, I already know that this, now, since it broke out of here, I already know that this pair was very much a bearish move. The next point will be this, and this is trying to look like a third touch of this support level. And now the pair has made it lower high, lower low, lower high, lower low, equal highs. Equal highs is a bearish reversal, tanked, and it has made a lower high. I want to see a daily candle close below here for me to enter this pair from next week. This is it. Now, we know NFP analyst. I think last week I read, based following the fundamental driver, I read when analysts said the pair is going to make a rebound close to this price. This is 145.500 price. Which is here, and it has made that, which is this, following the NFP news that was released on Friday yesterday. And now, if the pair should rally up again, it's coming to either replicate the same thing that happened here, which is a double top. And double top, as we all know, are bearish reversal pattern. It's a signal telling you that the pair is about to go bearish. So once I see something like this, I will start selling. However, I still have a double bias on this. The first entry requirement will be this. I want to start shorting once I see a 4-hour candle close below here to this support. My stop loss very much here, and now this is the daily time frame. So I want to enter from here. I want to see a 4-hour candle close here. This is 2.08 RRR to this point. The second is if this pair should rally to this point, making it a double top. This is where I want to enter to this point, 2.17 RRR, and my stop loss is very much going to be above here. This is what I'm going to be risking to be making this. And again, understanding the fact that I still have a support that have not been cleared. This support will have to be cleared just like the same way it was cleared on USDCHF. Understanding this over the years has given me the leverage to know when to enter the market and when not to. Now, if I should go to the 4-hour time frame, the 4-hour time frame is where I want to look for entry opportunities. And merely looking at this, it tells me that if I bring out my trend line to check, which is this, right? Now the pairs is, it got here, it rallied back up, and now it has made a higher high, a higher low. I want to see if these higher highs are taken out. Once these higher highs get taken out, and I see this trend line, I see a candle close below this trend line telling me that this trend line has been broken, which means this bullish pullback has been broken. I will start selling, or I wait for it to get to this level. This is where I want to see a double top following the provisions of the daily time frame. Now the 4-hour, I don't usually analyze on the 4-hour. The 4-hour time frame is where I want to see if my entry criteria are met, and I start trading accordingly from there. Likewise, I have other buyers on GBP USD. If I go to GBP USD right now, if you can see, this is a range. When I enter these markets, from here I closed out here after seeing that the market has gone into a range. I allowed it to, and since then I've not touched this pair. As you can see, all these are psychological levels I saw after plotting them. First, I did my analysis. I had my levels plotted out, and I waited to see the provisions of analysts and big banks, what they are saying. And based on UBS analysis, they are saying there is also a possibility of a bullish breakout from this range to this price, and likewise a bearish correction to this price, which means once I start selling from here, I want to see 2 4-hour candle close below here, then I will start entering from here. This is where I want to break even, and this trend line is where another bullish move will start. However, if it fails to do that and breaks out of this range, I want to see 3 4-hour candle close above here, telling me that okay, it is time to go bullish. Now on the daily time frame, the daily is already telling me that this pair might make a kind of bearish correction to come here to pick some buy orders, which means once it does that, telling me that okay, I can follow the bearish move by capitalizing on it to follow it to this trend line. This is the first touch, the second touch, and the third touch, and the third touch of the trend line always propels the markets to go further. And how do I know that this is a double top? If I scale down to the weekly time frame has already told me that this is a double top, and this is a neckline. And this neckline, as you can see here, although this wasn't closer to the neckline, but if I see the 4-hour candle close breaking out of that range, telling me that this neckline, now look at, whenever I see that, telling me that okay, I can now follow the bearish trend to the downside. This is why I have a double bias, the first bullish and the second bearish, because of noticing that this is a double top from the higher time frame. The first time I made a bullish move was from here, breakout. I saw a rebound, I entered here again and I closed out, and now I'm waiting for pullbacks. Once I see this pullback, I will capitalize, because it's a very good pip to actually milk and take out something from. This is more than 100 pip, if I'm not mistaken, and this is 3.68 RR. So which means I want to look how I can capitalize on this bearish breakout. Once it breaks out, I will enter and I'll ride it to this downside, and this is where I want to start looking for buy opportunities to the upside. So this is it on this analysis. It's as easy as that. Being able to understand where the market is coming from and where it's going. All these things I compiled it in a course that is very it's not pricey. It comes in a very giveaway price. If you're interested in it, you can give me a comment. And if you're watching from TikTok, or you're watching from WhatsApp, you know what to do. If you want to get the course very much teaches you how I plot these levels, how I go about understanding how the market is, how the market has gone out of balance, and factoring in the fundamental tenets where I get my fundamental bias and analysis from. So if you're interested in it, give me an indication below the comment section. And again, do well to subscribe, do well to like, and do well to share my content. I will see you next week, and we'll be doing the same thing. Cheers. Bye for now. Alright, thank you for sticking to the end of this analysis. It's just a brief overview of my previous analysis and the previous trades I made last month that made me that gave me some positive PNL. It's because I understand how the market moves. I understand from what point is the market coming from and what point is going. Because market does one or two things. Either it's going up or down. Your job as a trader is to be reactionary. Because every trader, every retail trader, we are retail traders, anyone you see, in as much as you're trading through a broker, you're a retail trader and you belong to the non-commercial. And the non-commercial are large speculators. Your work is just to speculate, make money by speculation. You make your profits by speculating where the market is going. You are not a commercial trader. Commercial traders are airlines and big institutions that hedge against the market. And again, you want to position yourself in such a way you are not trading against the overall trend. If the trend from the higher time frame is bullish, your job is to go to the lower time frame and look for pullbacks. Once you see a pullback and the market has flagged, you see that it has tested your minor support or minor resistance, you start buying from there. Just like GBP USD has made a double top on the weekly time frame. All I did was go to the daily time frame, map out my neckline, wait to see if the market is going to break the neckline to start knifing down, or it breaks above the resistance. It's as simple as that. You being able to interpret the market, the technicals first. You get the technicals in shape by knowing how to map out your key levels, knowing how to see the psychological levels. Then you go to your fundamental. You want to see that analysts, you're on the same lane with them. What they are seeing is what you're seeing. The price movements they are projecting and the prices they are projecting on a particular asset or on a particular currency is almost the same thing as you. You just want to make sure you're seeing what they are seeing, because these guys have the large liquidity to move the market. You don't really have that, and they are the ones you are trading off of. You are just following their footsteps. Once you do that, you're not trading off the analysis now. You're now combining both your analysis, the technicals and the fundamentals, then bringing them together. And once you bring them together and it comes in confluence with some of your charting tools like your trend line, your fib level, your patches and everything, or if all these things come together, which means you're correct, all you have to do, wait for confirmation and bounce. It's as easy as that. So we'll continue next week. I want to see you here. Make sure you like, comment and share, and also click the subscribe button, because that's the most important thing, so that anytime I drop my analysis, YouTube will recommend you to watch them, and I will see you on the next one. Cheers. So if you're interested in getting the course, just comment interested and I will mail it to you. See you next week. Bye.